Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it's May 16th, and we got a lot of economic news to cover today, and we're going to jump right into it. We have starting out the Producer Price Index for the month of April, and this is the index that shows us the inflation on the wholesale level. Now, it is an important indicator, but not the most important, primarily because sometimes if inflation does show up or prices go up on the wholesale level, it's not always passed on to the consumer, and that's what we're more concerned about. And that's where the PCE, personal consumption expenditure, and the CPI, consumer price index, are a little bit more important or weigh a little bit more heavily. So back in March, we had a reduction or pullback, contraction of 0.6%. And then, so we figured it would kind of keep in that same level at negative 0.7%, and it did. And this is the headline number here, where it includes the food and energy. But so when you strip out the food and energy, which creates volatility, and we look at the core PPI, and what that essentially is that we strip out the volatility of the food and energy because they could swing back and forth, and that's what the Fed typically will look at. It's more the core on these type of numbers on the PCE, CPI, and PPI. Now, we had a 0.2% growth last month in March. We figured it would kind of continue increase and only went 0.1%. So when you take out the food and energy, that obviously shows us that there's a decline in those two areas where they came down a little bit. So right now on the wholesale level, it's showing very mild growth or in the inflation section. So right now, inflation is obviously not showing any signs of a concern right here. If anything, it could be potentially the opposite, stagflation. So that's something we'll have to kind of keep our eyes open for. The next item is the Empire State Index, and this is the index that will show us the manufacturing in the New York region for the month of May. So back in April, we had a 3.1. And then we figured the forecast would be at 3, and it actually declined to negative 1.4. So basically 0 is the nil number. Anything above that is considered expansion. Anything below that is contraction. So basically, obviously, it shows this expansion. And we can see the slowdown at 3, where we're just barely showing any expansion, actually showing some contraction this month here. So obviously not a good sign right there. We also have the industrial production for the month of April. So back in March, we had a 0.3% growth. We figured the forecast for April is negative 0.3, so showing some contraction, actually more of a contraction than the estimates came out. Capacity utilization for the month of April, we had 78.3% in the month of March. We figured it would be pretty close, about the same, but with a slight tick down to 78.2, and it came down to 77.8%. Not the greatest of numbers there as well. And that, last but not least, we got the Home Builders Index. And this is the confidence level for the builders out there, if they feel that maybe they should expand, create more building, or if they should not. It's their confidence level. So we had a 41 back in March. This is for the month of April. Actually, this is for the month of May, excuse me. So back in April, we had a 41. We figured it would tick up. Forecasts were going to tick up slightly up to 44, and it came in at forecast. So a little bit better forecast right there. Not the greatest because we were much higher, like in the 80s back when they're the earlier 2000s. But right now we're at about 44 and showing some improvement in that arena because obviously we're seeing inventory levels at a very thin pace right now, and they're kind of seeing that and taking looking at probably you'll start seeing a little bit increase on building this again. So let's go ahead and take a look at the technicals with the stock market. Right now, the stock market's currently up. And then some news came out with the GDP reports coming out of Europe, and some more notable is that France shows that they just slipped into recession, and Germany just narrowly missed it with a 0.1% GDP growth. So they just missed going into a recession technically, but France unfortunately did not make the cut. So we'll have to kind of wait and see how those with the second quarter results coming out, probably in July. So we'll have to wait and see how they'll shape up here. So let's take a look over at the bond market, see what the interest rates are doing today. And as you saw, we had a pretty big drop here. So when we first talked yesterday morning, we were way up here. So we were kind of showing that we could have potentially a change, maybe potentially we could show ourselves improvement in the interest rates, but it didn't happen that way. So actually, we actually worsened in the day, reaching down to about the 102.50 range and closed at 102.50. Currently, we're at 102.63. So we improved about 7 basis points. So right now, there's really not much improvement on the interest rates level. And as we've been kind of speaking, this has actually been creeping down a little bit further. So we gotta, I do think we'll have a floor of support here at the 102.50 range. We got a lot of room here, as we can see this level coming down here. We got a lot of room where we can improve on the interest rates, where we can improve our situation here. So I think we'll have a little bit of a floor support here. It could go sideways pattern here until we reach this and then break one way or the other. That is a possibility as well, something we have to be careful on. But hopefully we'll show some improvement here and get some of those rates back. But as of right now, it looks like we're getting a pattern, obviously looking downward trend, which means rates are kind of rising again. So be cautious. All right, folks, thank you very much for watching. You guys have a wonderful day, and we will see you guys tomorrow.